Hey, cheers, everybody that's live watching on the replay, wherever you may be. If you're out there in orbit on the International Space Station watching this channel by somehow, hey, we're happy to have you along. I'm Russ, and let me stop holding this cup. So, welcome Friday night because I have some traveling to do. Going to be in Vegas this weekend, so thought we'd do it tonight. Give our little get together, our little weekly communion, shift it, observe it on a Friday. So, hey, what's up, William? William Stadler, happy to have you, man. So this is an interesting one. I'll just preface it. Actually, I was just looking at some dividend news we can get to. We'll start with that so we can let a couple people wander on in. I'm sure some of you are coming over from Mr. Ryan Williams' channel in the happy hour, so hopefully you're still happy and ready to go, you primitive screwheads. By the way, that's a Evil Dead reference if you don't get the shirt. I'm a big I can't go fast on that word, horror movie fan, so hopefully you guys are hearing me okay. And yeah, we'll start with news. But anyway, I'm going to preface the topic that I wanted to go over because, maybe maybe I'm just learning. Maybe I'm getting smarter. Maybe I'm going crazy. I don't know. But I was doing some research, looking at some businesses, and came across, three of them. Visa is one of them, but Casey's General Store looks really interesting. And another one, Atcor, ticker ATKR. I believe. And it's funny. So looking at Casey's and Atcor, they had dividend yields, starting yields of less than 1%. And it's just something that I've done. I've been dumb in the past, believe me, because I've not bought stock or businesses, right? Stocks are little slices of a business, and I've not bought them because the dividend yield was too low. So I did a little spreadsheet, which will be linked below. But before we do that, some of you are filing in. We'll just do news here real quick. And I saw a very interesting news article with a monster. Yes, I like horror movies. There was a monster dividend raise. But before you get all excited, we'll talk about that. So let me pull up this right here. All right, so this is news. Simply Save Dividends. They had a couple news articles here. Obviously, there's tons of news. J&J, by the way, went to. Sorry, there we go. I know I'm old. I got to get my phone going because I got to know when I can't see my screen. Anyway, so J&J bought Shockwave. It's something that breaks up arterial buildup, like deposits in the heart, near the heart valves and all that. Yeah, you can tell I'm real, right? I'm a welder. Like, you don't want me doing anything with that. So it'll be good for people with, I believe, things going on with plaque buildup or blockages in their arteries. Kind of like how kidney stones get broken up. Same thing. It uses sound waves, so we can talk on that. But either way, they refreshed their outlook on Consolidated Edison. That's a utility. Funny because I threw a utility into our little my little spreadsheet that I got down there. Phillips 66 raised their dividend 9.5%. That's their 13th increase since going public. So what's up, PSX? I don't see too many of their gas stations around anymore, but 2.69% yield. Home Depot, they want to get more into the professional side of things, so they bought SRS Distribution earlier in the week for $18 billion. So 2.51% yield. That didn't change anything. They don't think it's going to hurt the business anyway. Simply Safe refreshed their outlook on Realty Income, which we do have 200 shares of Realty Income. And yeah, I love that. They got their start in 1969, the same year Warren Buffett wound up Buffett Partners Limited. His partnership, he officially retired in 69, and Realty Income was just getting going. They had a single investment in a Taco Bell. And then one more, C.H. Robinson, they downgraded. I think this came up on Kevin's channel. Somebody asked about it. They downgraded their dividend safety score from 80 to 60. borderline safe because, as you can read on the screen, their shipping volume and prices continue to contract, pressuring C.H. Robinson's dividend coverage. So that is no bueno. And here's the big one. GE raised their dividend 250%. But again, before you get all excited, it was at 8 cents. And what they did, they finally split themselves up. I think the days of Jack Welch are gone. The giant conglomerate thing that he started, you just bolt on anything and everything. So yeah, they spun off their healthcare and their energy businesses. So now it's simply an aerospace company, and they raised their dividend 250%. And again, they're going to target 75% return of free cash flow through shareholder dividends and buybacks. So GE, let me know if you'd like to invest in GE. And then I can't stop saying refreshed. They refreshed their outlook on good old Welltower, the nation's first healthcare REIT. And that was that. So that is a little bit of news for all y'all. Before I get into my main shindig here, I'm just going to say hello to everybody. And this is going to be an episode where we're going to go quick here. I'm going to talk with all y'all in real time. All you primitive screwheads. Again, Evil Dead quote. If you know, you know. So here we go. Again, Casey's popped up on my radar, which they are one of the United States' largest pizza chains, right? Because they do pizza. They are everywhere. I swear to God, when we drive through these tiny little towns, these little podunk towns, farm field towns, there's a Dollar General across the street from a Casey's. It's like they're everywhere. It's crazy. So with that being said, this is a little thing I made. If you want to look at it a little more in detail, click the link in the description below. Hey, I want to say what's up, Nathan. Happy to have you from Mr. Ryan's channel. But so here it is. Real quick, going through these. Casey's, the way you look at this, their current yield is 0.55%, all the way on the left here under the Casey's logo. See how beautiful that looks. So in 2014, their starting share price was $67.99. Currently, it's $315. The yield in 2014 was 1.04%, but the yield on cost now, not crazy, not killing it, 2.54%, but look at that 10-year return, 404%. And then that's an average annual total return of 18%. So just for reference, I put a couple others here. We won't just read every line, but Costco, current yield 0.58%. And their yield on cost, if you would have bought just 10 years ago, 10 years isn't that long, 4.11%. I swear to God, if Costco had a 4.11% dividend yield right now, I would be doing backflips to buy it. I would probably be, taking out a second mortgage on the house, all kinds of things to buy it. But you could have had that by buying in April, the first week of April 2014 for $110 a share, and then just sitting on your hands, reinvesting the dividends, doing nothing. Well, I guess that's a little more than doing nothing, but yeah, I mean, 690% return. So that's crazy. Visa, kind of a similar story, 473% return. Apple, that starting yield was actually a little higher than I expected. But we'll go back to Visa because that's the one that was on the thumbnail. 0.68% starting yield in 2014 would have been low. I would have been like, off my radar. Yeah, no thank you. But $51 a share, and you just sit on it. And right now, your yield on cost would be 4.23% on Visa. 10 years, people. We're not talking like 40 years here or something. And then it's a 473% total return. Apple, 914. That's one of the Mag 7, of course. But then some of the favorites that I've had in my portfolio, AT&T, check that out. They had a starting yield of 5.09% in 2014. And your yield on cost now is actually lower. It's 4.18%. Buckets of yuck for AT&T, 19% total return. Altria, better, 105% total return for Altria. So this is just trying to wrap my head around just stop ignoring the dividend yield, or stop ignoring the business because the dividend yield is low. Duke Energy, the utilities, we all like them for income, but I mean, check that out. Your starting yield is 4.40, and after 10 years, you have a yield on cost of 5.71. So, yeah, Ares Capital, we all love them. I love them. I have a lot of shares. 202%, little better. That almost matched the S&P 500 on the very right there as we wrapped this up, which was 233% total return. So there you go. Oh, also what I want to show you guys, if you want to do this, you can do it for free. Links in the description for both. So I pulled up Visa on Seeking Alpha. I checked this with, hey, look at this. I just noticed this. Wow, everybody. Fellow YouTuber Dividendology. That's right. I talked to him. He's started writing articles for Seeking Alpha. So, what was I saying before Mr. Dividendology disrupted me here? Interrupted me. Disrupted. I don't even think that's a word. Is that a word? Okay. I'm going to get through this. But if you want to do that little thing, click on, if you do incognito, I checked it out. It'll work. So you click on, you type in the company, you go to the summary page. You're going to want to click on dividends and then click on dividend yield. And when that comes up, just scroll down to the bottom and you'll get, let me make it a little smaller. So you'll see the dividend yield. You can, now I can go 10 years, but on the, if you're not a paid member, if you don't have an account like iPremium, you can only do 5 years. 10 years is locked out, but on yield on cost, you can do 10 years. And it's just really cool to do this for any stock. You pull it all the way to the right and it'll show you at any point when you would have bought. So right there, if we would have bought October 13th, 2014 and held, you'd have a yield on cost of 4.04%. So that's one thing you can do with Seeking Alpha. And then this is dividendchannel.com. And you don't have to be a farmer to use farmersonly.com, by the way. You don't have to be lonely. Let's do, I don't know. Here, apparently I looked up Whirlpool at one point, so we'll just do Whirlpool. And again, you just drop down any year. You know, we'll do Poppy's birthday here from the year I went. How about we'll just go, I don't know, 2014. Pick a year. There you go, 10 years. And then you can compare that to something too. So if you want to do S&P 500 or another stock, you check it down there. And it just does 10K invested. And it'll give you another window here that you're going to pull up. And it'll just show you the growth of $10,000 with dividends reinvested and without. And of course, SPY is crushing it because Whirlpool's total return after 10 years is 2% with dividends reinvested. Buckets of yuck. We don't like that. So anyway, there you go. So have fun with that. If you want to compare something or look at what the growth from going back to the mid 90s or any date would be, then that's what you got. So I am going to now catch right the heck up to all you guys, all you people. What do you think of that? What is your take on yield on cost? And I know like my buddy European dividend growth investor will not really consider something if the starting yield is maybe 2.5%, I think he uses. But so I'd love to know what you guys think. Is that a thing? Do you not care? Do you buy everything? Are you looking at the business? You know, they say to chase profits and not yield. So I agree. So Shamir, you're somebody that's closer to my age, and I'm getting pushback from younger investors that say, you know, they don't have time to wait. They don't have 30, 40 years to invest and to do this. But it sounds to me like maybe younger investors, you know, are wanting to shortcut to get to work optional quicker. And I don't think you can do that. Yeah. So the title of the video, man, that was a little bit, and there you go. You just proved my point. Yeah, that was being a little extreme. Maybe it's not dumb, you know. You don't want to call people dumb, but hey, hate the game, not the player, right? That's kind of what you got to do. Dude, you know what? That one I struggled with. We did a little bit of bear porn, and I think I just wanted to use that in the title. It was like the worst viewed live stream video of just I don't know. Probably all time. It could be. Yeah, Chris, I agree, man. I'm thinking of that because, like I said, I'm looking at these three businesses that look really good, really solid, and then my gut instinct was like, but that yield is so small, so small. So I was like, you know what? Papa here has to go and back test it, and I was like, that's kind of crazy. Yeah, so far, I mean, I haven't torn into it. I did buy, I think 9 more shares of J&J today as the price started falling a little bit, but 13.2 billion for Shockwave. I know I talked about it a little bit, but yeah, it's they paid a pretty penny. It from I went on StockTwits and was reading the comments from Shockwave's. It's Shockwave, right? Shockwave was a ride at Great America when I was a kid up there in Six Flags Great America. It was a Shockwave. It was a roller coaster, but so now that pops in my head every time it's just derailing me. But yeah, they say it's going to be accretive right away. It's going to fit in nicely, and it's going to boost the margins for their med tech business, which they want to grow that. And I think the med tech is going to be around a lot longer. Like it that has patents too, from what I read, but sometimes it can be a little bit difficult to, man, if you're doing that, if you're a product, if you have that product and you're shooting sound waves into people's bodies to break up hardened arteries or whatever it is they do, I mean, are you going to want to buy the cut rate model just to save some money if you're the healthcare provider? So but they did pay 88 times net income. I think that was the number I saw, which is a lot, but the Shockwave shareholders are not happy about it. They thought they had a multi-bagger stock and thought things were just getting going. So they feel like J&J swooped in and kind of, took this great business away from them. So as a J&J shareholder, kind of made me happy to read that. So, but yeah, what's up, man? So I'll be having a little meeting with Mr. Williams on his home turf. So I'm going to buzz through you guys here. Casey's General Store. You know what, Dresh? At the risk of being too, I'm going to put them up. We'll put them up. Who did that? That was a cartoon character. Put them up. CASY. So Casey's General Store, 0.54% yield, which is actually, the price has been going up, so the yield's been dropping, but let's see if it says how many they have. How many stores? 1959 they started. Now it doesn't say how many here, but believe me, they are everywhere across the United States. But look at the dividend growth. 15% 20-year CAGR, 13% they last raised it, 8% 5-year CAGR. They're getting ready to raise it again. So for, does it say how many years? 23, right down there. 23 años. Sin without, I don't know how to say reduction, but so you can see their yield is actually below the 5-year average, but that's because the price just keeps going up, pulling the yield down. I guess it's a good problem to have if you got in early. And then we look at this. So yeah, I mean, it's a good business. 18% free cash flow payout ratio. Free cash flow per share has come down a little bit, but still, I mean, they're easily able to cover the dividend. And where was their shares outstanding? Kind of flat, slight dilution as of late, but sales just way up into the right. Just healthy margins. It is a healthy business. And yeah, free cash flow margin could be a little better. So those margins could be a bit better, but I think it's the growth. We only can invest going forward. Look forward. Net debt is pretty low, and so anyway, they popped up on a screen that I was looking at, and I was like, "This is very interesting. I'm gonna start digging into them a little bit more." So, yeah, that's interesting, man. I didn't. I guess I should say I see them all over the Midwest. I'm in Chicago. I know it's weird. I don't have the accent like people around here do. Domino's, yep. Domino's is another one, right? I don't know what their yield is nowadays. Interesting, John, with the home services growth in AI and robotics. I've heard a thought, and I'd love to know what you guys think about this. I'm going to get caught up here. So, is that I know here in the United States, don't really get political, but Mr. Bernie Sanders is really pushing for that 4-hour work week or 4-day work week, right? 4-hour work week. Isn't that, that's Tim Ferriss, right? No, he's pushing for the 4-day work week. But if that were to happen, I don't know if it ever will, but wouldn't there be more time for people that to be leisurely? So maybe things that are leisure focused? I don't know. That could be, it's an interesting thought that I came across. What? No. What didn't I share? Oh no. Well, hey, this is what happened. What didn't I share? Yes, you see, you guys got it. I'm guessing I didn't share Casey's, right? I don't know what happened there, and I do apologize, everybody. So, yeah, it has to be Casey's that I didn't share. Oh well. Hey, you know what? Can't go back in time. So let's just get caught up. Pretend that didn't happen. You know, we'll just believe that didn't. Yeah, so actually that's one person that I left a comment on Dividend Bull's video, and I said the more appropriate title should be how to invest if you want income right now. That's what I thought of it as. And in the video, one of the examples he used was Ares Capital versus Sherwin-Williams. Yes, starting right now today, Ares Capital is going to outperform Sherwin-Williams, but one of the commenters or somebody replied to me and said, well, you know, I don't have 30 to 40 years to work or, you know, until whatever. And it just sounds to me like people are trying to shortcut. So, hey, you see the numbers, and I ran it, the total return, it was better for Sherwin-Williams. So, Mr. Ryan Williams, don't eat a lot of food and drink a beer with dinner. It gives you yeah. And it's so hard. It's so hard because then I think like, well, what am I missing? But I think I texted this to Ryan that, you know, why don't any of the super investors, why don't we see them? Why isn't Warren Buffett buying Ares Capital or any of the BDCs or any of them, Ray Dalio's jam? Why are they all, from what I know, for most, hey, what's up? That's my buddy. We were talking about it. So yeah, what's up, man? Yeah. And you know, there's more than one way to financial heaven, but I don't know. It just feels like a shortcut for me. So could be wrong. Maybe it's different going forward. You know, none of us knows what's going to happen in the future, which what makes this movie so interesting because we've never seen it before. So, yeah, Dividend Dude, what's up, Dan? Chasing yields, you think about falling into. Dude, I did it a lot. AT&T is one of my bad ones. And, you know, I know, God, a couple centuries before the birth of Christ, Demosthenes, I can't say his name. Demosthenes, right? He said something to the effect of, what a man wishes to be true, he will believe. Something like that. We could, you know, what a person. We don't want to be inclusive here. So, but I don't know. I mean, if you just want something to be, that's why you have to check yourself. I think I'm almost caught up to you guys. I love it. That's interesting. I need to get into the 3M because, yeah, so they sold off. They spun out the healthcare business side of things, the consumer health, Solventum. And I don't know. They haven't cut the dividend yet. We'll see. Oh, we're getting ready to do earnings, right? This coming Friday, a week from today, I think JP Morgan and a couple of the banks. I know JP Morgan reports, but what the hell is a sauna blanket, Janice? What is a sauna blanket? Yeah, we We can do that, man. We can do it. Yeah, thank you. Thank you, Arm3. That was the Wizard of Oz. It was the Cowardly Lion. Yep. Put him off. God, I haven't seen that movie in a long time. There's one for you. How can you tie in investing or dividend investing into the Wizard of Oz? I don't know. I'm sure there's a way though, because like I tied in Shawshank Redemption to being I think it was dividend investing. You could just say investing because it takes many years. It took Andy Dufresne a long time, decades to plan his escape and to have that come to realization every day, chipping little bits. Every time you invest in the market, right? Every time you make an investment, that's a little bit of your future that you're bringing forward right now. What you want. So he knew what he wanted, but he had to chip away that little tiny rock hammer and take the, little bits of wall out into the yard. That's what we're doing. Little by little, brick by brick. And as my buddy Harris Elliott would say, is one penny at a time, right? Interesting, Shamir. You fell in that trap with Altria, Realty Income, and BTI, AT&T, and Verizon. Yeah, and I think, as I told my buddy, what was your name? SCSU 300. I thought I saw excuse you. As I told him that, I think, why couldn't you just invest for many years into what is hopefully the superior total return option, and then when you need the money, like, I think Dividend Bull used $100,000 into Sherwin-Williams and Ares Capital, but hey, why not, once you get that big thing, you're paying less taxes, right? And and I know it's not as sexy because people love the dividend checks coming in, but I mean, if they're buying back shares when the stock's at a good valuation, when it's cheap, but you don't have to pay, you don't have to be lonely, farmersonly.com, but you also don't have to pay taxes. You're not forced to pay additional tax on those dividends you receive. So that's an interesting thing I would love to see, is if there was a calculator that did that to showed you when you did that. Patel, what's up, Patel Ron? Thoughts on that? I believe that's Southern Copper. I haven't looked at that. Here, we'll just give you a safety score and let's see if I can do it right now. Oh, I know what happened. I was showing you guys Seeking Alpha. I only shared I wasn't sharing the whole screen. I was just sharing the Simply Safe. So you guys saw that. Okay, duh. That's what happened. So Southern Copper, yeah, dividend safety score of 24 unsafe. And I think the only reason they do that is I think they've been on a tear. But yeah, mining, exploration, smelting. Shout out to all the smelters out there. They refine copper. Peru, Mexico, Argentina, Ecuador, and Chile. So pretty much Latin America. Could be some, they're based in Phoenix. So there could be some risk there with foreign governments, but yeah, this is why. So I don't know if they have a variable dividend, but I'm sure just from the nature of their business, yeah, it's, this has more ups and downs than the Shockwave roller coaster does, Southern Copper, but currently they've been growing it. It says 0 years. Yeah, because it's just up and down and up and down. I mean, that's what you get. So that's why it's unsafe. But again, their share, on a tear, 52-week high. So free cash flow payout ratio, yeah, it's just, I don't know. It's not for me. It's too yo-yo. If you want, I'm not going to look anymore, but God bless you if you are. Does anybody else invest in Southern Copper? Southern Copper. Save Ferris. What's up? That's a good one. The band or the movie? I don't remember the band song, but the movie. That's from Matthew Broderick. Man, give me a moment here. I'm starting to feel like I finished my Reagan book. Poor guy, he got Alzheimer's. But Casey's, you said, yeah, it was founded in 59. Here, that's what you gave me. I wanted 2,592 stores as of October. So they're growing, but they're growing, and they're really, you know what they're really pushing into? They're kind of want to be, I guess, like the local yokel pizza and beer headquarters. You need pizza and beer, you know, pizza, beer, lottery tickets, gas, cigarettes, tobacco. I got you go to Casey's General Store. It's a party all in one store, right? So very nice, John. Thank you for sharing that. Migo mio. Growth for 3M doesn't excite me. Yeah, and we're gonna have to see what that looks like, you know, going forward without Solventum. I don't know. I'm sure somebody can adjust for that, but I did see your comment, Dan. I did see your comment on that. Yeah, I think it did, but and I don't know, just shared my honest thought, not trying to intentionally trigger, just give a different point of view. And hey, if you don't really want any growth, but you want that income coming in, hey, have at it, man. Nice. Frank's long Southern Copper. Cool, man. That's again, there's more than one way to financial heaven. So all right, I'm gonna get caught up here. So apologies. Who Oh, Ryan's video on that. Yeah, well, and dude, this is the best. This is the best advice, Kevin. If I could gold star this, I would. Yeah, I put it this way. I think of it kind of like a girl, right? You can be attracted by the dividend, but sometimes some of that really attractive is kind of crazy. It's going to be a problem down the line. So don't chase yield. Don't just chase looks. I know as men, as males, people overemphasize that. But yeah, I don't know if that might be the best analogy. But it is an analogy. I assure you that it is, my fellow dividend investors. But I would rather go with Costco, dude, just because they're so big. They're so. I think they'll both be fine, right? I can't see either getting disrupted by AI. Costco's just a beast. Costco's a beast. Sherwin-Williams is a beast. But honestly, I'm more familiar with Costco, and I think people will use that more than Sherwin-Williams. But I think it'd be easy to, or hard to go wrong with either. Oh, another one. Actually, I came into was McCormick. We were watching, I think live. Oh, no, we were watching volleyball. The Pro Volleyball Federation. It's a women's league, just started this year, but there was a YouTube. They live stream their games for McCormick, ticker MKC. And my wife was like, "Hey, does McCormick pay a dividend?" It's like, yes, they do. Looked at them, and actually their share price has been not all the way. It's I think the middle of the 52-week range. But anybody have any thoughts on McCormick? Right? And I think they own Cholula, which is my wife's favorite hot sauce. Listicles 50 of what? I missed that, Patel. 50 of Southern Copper, I think you were talking about. Gotcha. Yeah, Warren has been buying a lot of Occidental, and I think they're a pretty big owner. I think they own more than 10%, right? Yeah. I'm gonna start calling Ryan. There you go. Everybody just start calling Ryan Sherwin. But yeah, as Kevin Burgess was saying, don't just buy for a dividend. You can't do that. The underlying business is what is going to be paying that dividend. And if the underlying business is fantastic, guess what? The share price is going to keep going up and up and up. So I don't know Wallet Investor. I've never heard of it and I've never seen it. So I don't know. Have any of you seen Wallet Investor? All right, I am almost to and you see that's the thing too. And Dresh, we could get into the conversation about right if something seems expensive now, but they continue on the pace they're on, it's not going to seem expensive in a couple of years. But that's the thing, man. Man, that's why we want to buy when things have a steep discount or decline, bigger margin of safety, I was looking at Starbucks today. It touched the 86s. And you see, again, I'm price anchored. I dibble. Dibble? I don't know what Dibble is. Not Rob Dibble. Shout out if you're Rob Dibble and you happen to be watching. I think he was a pitcher for, wasn't he a pitcher or a first baseman for the Reds? I think. But anyway, I dabbled a little bit in a little dabble do ya, right? I dabbled a little bit with Starbucks here and there, but I was adding a lot when it was around 79 bucks. So I'd love to see it in the 70s again. And I think a lot of it is just the China stuff, quite honestly, and the unions, right? That's in there too. Yeah, and he had to crawl through a shit. Well, you know, we all have to do that sometimes to get to our freedom. And well, there you go. That might be an analogy. That might be the painful part of waiting, you know? Yeah, Ryan, I haven't looked at Sherwin-Williams in a long time, but you know what? Let's look. Well, look, I'm almost caught up here. Dresch. It's all the smelters. Yes. If you're a smelter, you dealt it. It was a smelting accident. Yeah, Ryan. What's up, man? We'll see you. I didn't even expect you to swing on by, buddy. So, is it come on Eileen what they did? My God. What were we going to look at? Oh, Sherwin-Williams. All right, we'll pop. I'm almost caught up to you people, to you primitive screwheads. Again, for those of you just joined in, it's a reference from good old Evil Dead. All right, here we go. We're going to look really briefly at Sherwin-Williams. 87, very safe. Go quick here. Let me guess. I don't know when they were. I'm going to say like 1884. Ooh, way off. Founded in 1866. So there you go. Sherwin-Williams. Let's see their dividend growth. Yeah, fast. 13%, 20-year CAGR. Oh, you know what we'll do? We'll do a back test, and I'll show you guys the drip calculator. 45 years, so they will be a dividend king soon. We'll see for 10 years ago who the better performer was. So place your bets right now. Get your bets in. 52-week range. Sherwin-Williams is toward the high end of it. Yeah, and I expect this probably exactly. Low free cash flow payout ratio. Earnings per share. Free cash flow per share just growing. Yeah, it's healthy business growing. Shares outstanding decreasing. Total sales is just consistently up. Really stupidly high return on equity of 70%. Really high return. Yeah, look at those margins. All four of the margins that they share here on Simply Safe are just fantastic. Debt's a little high, 76%. So that's a little bit of a bugaboo, but nothing crazy. So here we go. I'm gonna have to do this to share. We'll see who did better. I gotta share my whole screen here. I could just put this on, actually. So here we go. This is what I was showing you guys. So we'll do, who are we doing? Sherwin-Williams. This is Dividend Channel. I have a link for this below. And we'll do April 5th. April 5th, 2014. And we will compare that to Costco. And then it charts 10K invested. We blow that up. Blow it up. So, too much. All right, here we go. Oh, it's not going to show it. Here, share this tab instead. Look at this. We're learning. I think it's going to happen. But hey, look at that. Except myself's in the way. Let me hide myself's. There we go. Let me hide myself's. So where were we? All right. So back to here we were. The winner is Costco. So either way, I mean, 472% return for Sherwin-Williams, 688% for Costco. And this top number here, the top line is dividends reinvested. The bottom is without dividends reinvested, which, you know, Costco doesn't cream them as much, but still beat them. So, I mean, either way, but look at that. Starting price per share in April, I put 7th, 2014. $63 to $329. Costco $110 to $704. This is what you get, people, with these solid businesses. Average annual total return 19% Sherwin-Williams, 23% Costco. I mean, it's just, and it's hard because those starting yields, they seem so small. So that's why. So that when you see a lot of like, roller coastering there, then yeah, chances are some of them have variable dividends. Another one I was looking at was, too bad Jim Betts isn't in tonight. He isn't in the office. Calmaine Foods, ticker CALM. I think they have a variable dividend. Spam. Yeah, I don't remember that. I do remember now them doing Come On Eileen. That's right. And yes, Ferris Bueller's Day Off. Beautiful. Filmed here in Chicago. In-N Burger. John would buy In-N-Out burgers if they were public. Family owned. Yeah. So everybody, what is your favorite family-owned business that you can't invest in? That might be an interesting one. I know Mars, Wrigley. I think Mars bought Wrigley, right? Yeah, there's a lot. Any thoughts on Palantir for growth? AI bubble or not? It is a Mad Hatter's Tea Party, man. Yeah, dude. I haven't really looked at them, but I know if you do want somebody that has done a lot of looking into them, go to Haley Eich's channel, EICH. Let me throw that here. She, young lady, very smart from merry old England. And that's her name, Haley Eich. Or Eich. I said Eich. But yeah, so honestly, I don't know that enough about him. But if it's a bubble, it's hard to say because I think it is like the internet. It's going to revolutionize the way things are done, but that doesn't mean every single internet company became, amazing, right? So it could be. It might be a little bubble. But I don't vote. Dude, I have so few shares. Even with like Nexstar, I have 107 shares. I mean, it's a fraction. When it might have made a difference is like Disney, right? Disney the shareholders just defeated Nelson Peltz's Tryon Capital. 31% voted for him. That was it. Like that was a beatdown. So that one might have mattered when you have, an activist investor trying to come into the business and it's very public like that. That's probably one of the few times I would have voted. And the shareholders spoke. The shareholders said, nope, we don't want you. There you go. Dude, literally, that's great. I guess I answered that. So I think it's a vote of confidence for Iger. The shareholders like the direction. They don't want Peltz, and we'll see. But honestly, I don't know, man. Put it this way, my kids, they grew up with the Disney, but now I think they exhausted the Marvel universe, and I don't know, theme parks. I hope they're not as political. That hurts some things. So, you own McCormick. What we wanted to say. And, look at this. Shamir, share why. Why were you upset or disappointed that Peltz lost the bid? From what I understand, Nelson Peltz hasn't really done that well everywhere he's been. It's not like he comes in and the businesses turn around. From what I've seen. Hey, Giovanni Mora. ¿Qué paso? What's up, man? Yeah, I know you're probably not Spanish, but maybe you are. I don't know. The price of the surge of gold. I'm still not an investor in it. I'm not going to be. If I were, I would rather invest in the miners because they're going to go up too with the price of gold. Just because, right? They can mine the gold and they can sell their gold for more. They'll get more money. Their earnings will increase their profit margins, hopefully. But man, it's just, I don't know. I could probably speak for the next 30 minutes about gold where, dude, and I forgot his name again. Maybe Dr. Doom, Peter, the gold, he's like one of the biggest gold bugs. Convinced me to buy gold, not personally, but you know what? It's a non-productive asset, and the short of it is when you have a non-productive asset like gold, like Bitcoin, You need like tulip bulbs, whatever it is back in the day in the Netherlands, right? You have to have more people coming in to pay you more than you bought it for. There's no cash flow component to it. Like I always say, if when I had a couple ounces of gold, we sold them and invested it, but hopefully I didn't put too much of that into AT&T. That was the wrong move to make. I don't think I did, but either way, when I had those ounces of gold, 10,000 years from now, there's still going to be an ounce of gold. They're not going to grow, every 90 days or every year. They're not going to fart out little bits of gold dust that I can scoop up and melt down and make more gold with. It just doesn't work like that. So, and when you compare gold versus just the S&P 500 or the productive capacity of businesses, it's not even close. It's not even close. And a lot of people get scared and they're told to go into gold and buy gold. So honestly, I have become very, I don't know if disenchanted is the right word with it, but give me the productive capacity of a business or the whole market. If it's gold or the S&P 500, I'll take the S&P 500. There may be a year or two where gold outperforms, but over the long run, businesses grow, businesses innovate, new inventions come along, technological improvements that businesses utilize to make more money. Businesses raise their profits, businesses hire more people. Do you know what I'm getting at? But with gold, it just sits there. They dig it out of the ground in Africa or wherever, transport it, put it into the ground in Fort Knox, and it just sits there and it does nothing. So I know it has some utility, but honestly, I just, yeah. But that's some thoughts on gold. Again, that's probably, hopefully, the condensed version of it. So, the proxy statement for Texas Roadhouse. Yeah, Dividendology. I know he's been big on Texas Roadhouse, right? Joseph Carlson, I think. Texas Roadhouse. They look good, but of course, it's like, are they too high now? Is it just on everybody's radar and they've pushed the price up? So, look at this. I'm gonna spin by some of you guys here because I got to be live with you for a little bit here. I get so... there we go. Dan, I'm going to see if anybody said something good, but... Oh, Jim, I just talked about you, man. Why did I talk about you? I can't remember why. Anyway, I talked about you. I said he wasn't with us, but he is now. Some investment or something, but... Yeah, Costco. There we go. So we did see Costco. Jeez, good Lord, I'm too far back. So a ska band. Yeah, the only ska band I ever really got into or saw was Less Than Jake out of Florida. So shout out to them. Yes, Costco and Sherwin-Williams are both low-yielding juggernauts. And man, as I love and I struggle, and it's a little bit of cognitive dissonance, right? As I'm growing and evolving as an investor, it's got to be about the business. And it's hard. It's hard because it's like, look, if I would have bought Ares Capital 10 years ago and been turned on by that, here, let's see what it was. Ares Capital, there you go. Put me on there. Hello. So Ares Capital and Costco, put it this way, 10 years ago, first week of April 2014, Ares had a starting yield of 9.36% versus Costco's 1.26. I probably would have saw that and been like, dude, Costco's nice, but that yield ain't nothing. But check that out. The yield on cost for Costco now is 4.11. Yes, it's not as nice as Ares is 11.3, but you've had an almost 700% return versus 202. I mean, is it really worth sacrificing 500% return for, a couple percentage points in dividend yield? Like, and that's what we all can answer. I don't know the answer for you, but, oh, dude, Rick, that's right. So Costco, you're right. They have when they just come into too much money and they say, we have too much money, big old special dividend. $15 they paid, right? They just paid a special dividend of $15. So I don't know. I would assume that that special dividend was factored in, but hey, if it is, it's still part of the business. Let's see. Would I buy Walmart at current price and dividend? It just doesn't excite me the way some other ones do. It's just okay. My daughter owns it in her custodial account. So it's kind of high. I mean, it went up a little bit, but you know what? Let's do this. For you, Rich, since I don't think we've spoken before, a word to the wise. If you create an Alpha Spread account, you can check for free 3 times a week. Let me put it in and then I'll bring you guys a Apple ALP. I know I can spread it. Sell. I can't talk anymore. I know I can spell it. Okay, now I gotta hold on. I gotta find you guys to bring you along here. Okay, come with. I need the Willy Wonka song. Come with me, then you'll see that I don't know the word. There you go. 303. So we were looking up. Oh, Walmart. You wanted Walmart. So this is Alpha Spread. Very cool site. If you put in another email address, you'll get 3 more. So there you go. They show Walmart as overvalued by 20%. This is a range, right? They give it an intrinsic value of $47. So its current price, $59.85. And then a worst case, I think this is 5 years of negative growth, something like that, how they factor it in. You can play around on the site. It'll tell you the intrinsic value, but 38.51, so they think it's a bit overvalued. But yeah, Alpha Spread, it's a nice site. They've been upgrading things, valuation back testing so you can see when price and yield and what you should have done. But I don't know what this is. Sorry, everybody. This looks like they have now incorporated an AI assistant. Very interesting. Get out of here. Look at that. Provide the EV to EBIT for Walmart. You just ask and boom, it'll do it, right? So the enterprise value to earnings before interest and taxes, this is without the depreciation and amortization. No kidding. Look at that. Pretty slick. I checked. You guys can see this. Good. So current value 16.55. All right, that's interesting. So that's the enterprise value is all the debt. It's the whole shebang. If you want to buy the business, that is the enterprise value. So the multiple for the earnings before interest and taxes, 16.5. And the median value is 15.98. So if you look at it that way, it's a little bit expensive. So there you go. That's kind of cool. Anyway, they give a whole bunch of other stuff here. Breakdowns, and I think they even have like let's see, they show their competitors. I think there you go. Yeah, competitors to them. Carrefour, there you go. And then I know, riveting, right? But look at this. Then the insider trading. There's been a lot of sells at Walmart. So, and I think if you click on it, it'll tell you who sold. Yeah, Alice Walton, Jim Walton. So couple Waltons were selling 3 weeks ago at $60. Anyway, I know this is really long, man. It's your first time here, so there you go. Alphaspread.com. If you, oh, that was it. Yeah, Jim. Calmaine Foods. Thank you. Yeah, they had a. All right. I'm almost caught up. I'm kind of. Yep, Mars is private indeed. Raising Cane's. I've never been. Anybody been to Slim Chickens? I don't even know what Slim Chickens is. I just know when go by my brother-in-law's house, he has a can koozie with Slim Chickens. Let's look it up. Why not? Why? Well, because it's my show and I'll do whatever the hell I want, right? I'm going to see it right now, but I got to bring you guys because that would be pretty damn boring. All right, I'm going to look. I don't even know where it's at, but here we go. We'll look at this. If we could type Slim. There we go. Slim Chickens. Maybe it's a one-off place. I don't know. There he is. All right. There we go. If you weren't hungry, you'll be hungry now. I don't know if this is a chain. It's probably not investable. But there you go. So there you go, people. If anybody been to Slim Chickens, company. Usually if you look down here, it'll say investors, but there is none. So I assume it is private. Anyway, so it's a chicken place with, guess what? Chicken. I know, right? crazy Slim Chicken sells it. Anyway, so solid gold. Thank you, Chris. Peter Schiff, Dr. Doom. That was the one. Brilliant. Thank you. You have Pittsburgh Plate Glass, right? I think that's the name of PPG. I know they do paints too, yeah? I think it's Pittsburgh Plate Glass Company. Yeah, Cal Maine. It's like throwing out Powerball numbers. Yeah, I think you're right. They have a different... Dude, I'm not... Of course I'm in Operation Ivy. My daughter's name is Ivy, for Christ's sake. I have a video of her. I'd have to find it. I think it's on my like super old YouTube channel that's unlisted, of me playing guitar with her singing "The Crowd" by Operation Ivy. One of my favorite songs, "The Crowd." So Costco, Comcast, John, you know Comcast. I think they're better than Disney going forward. I think Comcast they're just everywhere. Oh, nice. Thank you, Greg. I'll drink to that tip. That you could just delete. I think I may have tried it. Maybe I haven't. I don't know. I use it. I have 2 email accounts hooked into AlphaSpread, so that's 6 a week, right? So I will, I'll use up the 3 on 1, and then sometimes I don't use it, but it resets after a week. You get 3 more. I think that would be good, Chris, in the low 40s. Did they really, Shamir? I didn't even see that, and I figured it would be a whole, at the time, some people are like, this is the end of PepsiCo. They're going to be crushed. Yeah. Oh, dude. You remember Johnny Five? I remember Johnny Five in Short Circuit. I saw that in the movie. By crying out loud, I got caught up. Dude, yes. I got caught up just in time to find that Kevin went to Slim Chickens. How was it? How was Slim Chickens, Kevin? We need a review. Don't go telling your chickens you went to Slim Chickens. That might freak them out, right? What is underrated? THTA, Earth Creature. What's poppin'? I have not seen your name before, too. So we go from Slim Chickens to THTA, which, to satisfy my own curiosity, we're going to just look this one up on Simply Spread. THTA. Don't know that. Oh, it's a SoFi enhanced yield. My God, here we go. So what does it do? It's managed by Title Investments. Invests through derivatives and stocks of companies operating across diversified sectors. Derivatives such as options to create its portfolio. Growth and value stocks. So is it covered calls? What is it? Directly and through other treasury bills, treasury bonds, money market securities. Yeah, that'd be one I'd have to dig into to see exactly how they're getting that yield. But there you go. So that's unrated by Simply Safe. And I'm hoping, Kevin, you told us about, he's not going to let us know, right? What's hard pile? I don't know. Oh, I know what you mean. Yeah, the hard pile. It might be just right off the top. I don't, it's kind of like that one Kevin, when I was on Kevin's show, we looked at, I don't remember what it was, but you remember that? And this is why there's so many people from just all walks of life that are learning. And I just remember the comment was, hey, there's this, I'm looking at this, it was like, dividend yield of 3%. Is that good? And it's like, well, what is it? And, whatever it was. But Kevin had the 3-piece chicken tenders. They put a piece of bread-soaked butter. All right, how about Kevin says it was good. He had the 3-piece chicken tenders. They put a piece of bread soaked in the butter in the box. Not sure what that was about. Maybe supposed to be toast. He doesn't know. But hey, the chicken was good. So Kevin, thank God you were able to get down there to Slim Chickens. You were able to get the chicken tenders. I mean, you're eating. How you doing? When people ask you, hey, what's up, Russ? How's it going? You say, I'm eating. That's a good way to say that I'm doing okay. I'm eating, Yeah, anyway. Steve, to hell with it. Honestly, I really enjoy talking with you people, and just the fact that anybody, I know Kevin and I have talked about this, just the fact that anybody shows up is just awesome. But no, don't tell me you're eating your chickens, Kevin. I know it's toward the end, and some people just wandered in and they're like, "Is this a show about food or investing?" Yes, it is. Yeah, I know. I turn it on, but sometimes when I'm not paying attention, I know I have an accent, and it's like bringing up Haley Ike when I talk I talk to her because she's from England. Um, yeah, I told her I was like, "Hey Haley, what's it like to have an accent?" So that was the I don't know feeble attempt at humor, everybody. But yeah, you people, we got Bing Bong here with the Yum Brands. I think Ryan brought up Yum Brands not too long ago. Hey, see, there you go. Now I wonder where does Slim Chickens source their chickens from? Is it Tyson? I think Tyson supplies a lot of the country's food. So yeah, you're right, Jim. A show about food, investing, bees, and chicken. I'm going to read this from you, Earth Creature, like the name. It's a good net asset value. How is that net asset value, Ben, though? That's one thing I would look at is the net. What is that? Why did I do that? Why did, I don't think I wanted to point, but believe me, I'm not, what are they? The Proud Boys do that, right? Why, and then he does it again. It's like giving the finger and saying, like, who does this? Anyway, but anyway, the net asset value. You got to look at that because I think businesses or business yield max TSLY, the net asset value is declining, and I think it's just because they're giving a return of capital mixed in with some of the options and things like that. So always watch that, but we'd have to look at the. Yeah, honestly, dude, if you've looked into it, I just had never heard of it in just that little bit. So that's, yeah. Teach you welding. By the way, LECO, Lincoln Electric, that's one that I use their welding rods. The E7014 532nd welding rods is what I use. So, but we go from that, right, to, I don't know how to say, I was trying to set it up. I failed. Absolute fail. I'm from the 80s. No, actually, I'm from the 70s, right? I was born in 78, but yeah, I really don't remember much of 78 or 79. No offense, Kevin and Jim. I know you guys remember the 70s, but for me, I don't remember them. But I do remember the mid 80s, and I have very fond memories of Saturday morning watching Pee Wee's Playhouse. Very, very fond memories at my grandparents' house. And as I tell you guys, that was the time when we were living with my grandparents. I didn't have my biological dad left before I was 1. So I got a stepdad at 10. So from infant to 10, it was just my mom and my grandparents. And that was it. Just, the 4 of us. So very fond memories of that time. My grandpa, for all intents and purposes, was my dad. My stepdad and I know this has nothing to do with investing, and it's just an insanely long way of setting it up. I don't know why I'm doing it, but there you go. So I love the music. It was usually time to go out and play when I would hear this music. So I love it, and I do love you guys. I'm going to be in Vegas this weekend, hanging out, seeing Social Distortion, Bad Religion tomorrow night. So I got to get packed, get to bed, and I will say thank you so very much again for spending some of your time in your evening with me. And I look forward to seeing you the next time we are live. So Pee Wee, take me out.